Right? It's gonna work. Please. Hmm. I don't even know what that's doing. Killing myself. Okay, it's cray cray. Okay, it's 7 o'clock, and hopefully everybody's here. Not really sure how to work this thing. Okay, it's 7 o'clock, and hopefully everybody's here. Not really sure how to work this thing. Okay, I need to mute this thing. I can't get this thing to mute. Hang on a second, guys. I need to mute this thing. I can't get this thing to mute. Hang on a second, guys. Okay. There we go. Okay, I think I got it. Can you guys hear me okay? Is the volume all right? Yeah, I had an echo. I know I needed to mute it. And I think I did. So is the volume okay? Is there no echo now? Yeah. Okay, cool. All right, cool. Okay, cool. All right, awesome. Okay, we can get rid of that screen. I'm not really a pro yet at this stuff, so I'm used to Zoom. So, okay, welcome, and thanks for joining me this evening. I'm new here, so I'll just get started. Okay, so Bryan says you guys usually look at Forex Factory, and that's always a good thing to know when the news is coming out. That's important. So I always make sure when I get up in the morning, I start trading London right away, and I get up and I just make sure that I know when the news is coming out, because it's very important. And usually a lot of stuff happens at 4 a.m., 4:30 a.m. A lot of like either euro or pound news comes out that's really will move the euro or the pound. So as soon as I get up, I'm always constantly checking the calendar and making sure I know what news is coming out. So tomorrow at 2 a.m. there's euro news, and then they're having financial meetings all day apparently. And then there's CAD news, so that'll be nice for a CAD move. Maybe play the dollar CAD on that. And just not too much the rest of the day. FOMC guy speaking towards 1:15. Not too much news tomorrow. It really hasn't been. There were only a couple days this week, I think, that were really newsy, but not too much on deck for tomorrow. Loud? Is it too loud? Do you want me to turn it down? Do you know when the tweets are coming? No, I wish I knew when the tweets are coming. I'm as surprised as you are. But hopefully it pushes things in the right direction. Hopefully it follows the trend, because I trade with the trend. So, all right, we'll get rid of this. Okay. Well, let's start at the beginning. I usually start with the dollar. Okay. So the dollar is for the daily. Okay, so the way that I work is I use the weekly, daily 4 hour to find my overnight setups, and that's what I'm doing this evening. And the weekly is really my curve, the daily is my trend, and the 4 hours where I find my level. So I look for trend on the daily. So the daily for the dollar is uptrend, no setup. So basically we know that because the current candle is a single blue candle body at the end. The anchor candle is this single red candle body, and it's not engulfed by the previous move. And the nearest low with respect to the bottom of the anchor is right here. So it's an uptrend, and that's closer in time than the nearest high, which would make it a downtrend. So it's uptrend, but there's no setup. So it's uptrend, no setup. So I think essentially the dollar is probably going to try to retrace some of this area, because it made a down move. It hit off of some demand down here and is making this little tiny blue candle. So I think it's going to make an attempt to retrace this. Maybe only make it up about, I don't know, maybe 50%. Not sure. And then may fall down, because it just looks, it's been in this range for quite a while. So if it can't make it to the top of the range, then it'll probably make it up to about here and then fall down further, because it's got quite a ways to go. And on the weekly, if you look at the weekly, this is quite a rejection on this weekly candle. So it looks to me like there's a lot of room for this to fall down, but and it's kind of a hard climb up to me. That's kind of the way I'm looking at it. But we'll see. I mean, you know, the Fed could come out. You know, any Fed speakers can come out and push this thing wherever they want to. So, you know, it's all up to what the Fed people say. Okay, good. So let me go start with the euro now. Okay, so the euro is uptrend confirmed, and the weekly is downtrend setup. So if you were a very high time frame trader, if you were looking at downtrend setup on the weekly, you'd be looking for a daily time frame to short. But on the daily, we have uptrend confirmed. So we know that because these three action candles these are the action candles, and um, they've completely exceeded the top of the anchor to the upside. So, and with respect to the anchor, the nearest low with respect to the bottom of the anchor is here, the nearest high with respect to the top of the anchor is up here, so the lows are in control, and we have an uptrend because the nearest low is closer in time than the nearest high. So we have an uptrend. And if you drew a trend line, you could see that we have an uptrend right here. And since we've exceeded the top of the anchor to the upside, it's uptrend confirmed. So it did hit some supply though, up here probably on another time frame. You know, it's kind of, you can kind of see it in the daily, though I would expect more unfilled orders to be towards the top of this area than down here. So it's probably like a lower level time frame, you know, lower level supply zone that got hit and knocked it down a little bit. But it's clearly looks like, so far we have a blue candle, and it looks like it's going to try to retrace a little bit more. So we'll see what happens with that. But we don't have a setup on this pair, so we can skip it. So the pound dollar is downtrend, no setup, and we know that because the current action candle is a single red candle body in the end. The anchor is a single blue candle body to the left of the current action candle. It's not engulfed by the previous move, which are these three red candles right here. And the nearest high with respect to the top of the anchor is right here. The nearest low with respect to the bottom of the anchor is right here. So we know that the nearest high with respect to the top of the anchor is closer in time than the nearest low is with respect to the top of the anchor. So the highs are in control, and we have a downtrend. And because the current action candle is red, there's no setup. So it's a downtrend, no setup. So we have no setup here. We have nothing to look for here. Yeah, it was a really good move today. It was a very good move today. It really surprised me too, because let's go back to that pound. Because I had gotten in, I was looking at this on a 2-hour, so the picture that I saw on the 2-hour was here, and it had been doing this chop thing, and it was coming down, and I saw this before this candle happened. It was like that. And I saw that it was reaching down into this demand area right here, you know, and we had like a drop base rally, and then another rally base rally. So this area just seemed like it had a lot of demand and unfilled orders in it to me. So I ended up going long at 122,333, so right around here. And it just like I expected, my target was like up here. So it went way higher than my target. So I did not expect it to go 161 pips, but it really did. It was just gigantic. So I ended up getting up like right around here. And that was a good move I thought. I'm like, "Oh yeah, great." And then it just went even higher. So it was, it was a good day. It was a really good move. So let's put this back in the 4-hour. Okay, so let's go to the next one. So the next one is the Euro Yen, and this is uptrend setup. So the current action candle is a single red candle body in the end. The anchor are these series of blue candles to the left of the current action. The anchor is not engulfed by the previous move, which is the single red candle body, so we're not sideways. And since the nearest low with respect to the bottom of the anchor, right here, is closer in time than the nearest high with respect to the top of the anchor, the lows are in control, and we have an uptrend. And because the current action candle is red, we have a setup. So we have uptrend setup. We have permission to go long. as long as we find a level somewhere inside this anchor, these two blue candles. And this is technically the impulse move because the weekly is sideways bias up. So it's sort of the same direction. So we can consider this the impulse move. So we need to find a level somewhere in this anchor if we want to take this setup. There's not a lot of great stuff here, I'm going to tell you right now. We had this move up and then price came down and just retraced it out. Then we have a small wick overlap here. We have a small level here. There's somewhat of a level here, though. I don't like this clearing wick, but there's probably some unfilled orders right about here, too. So the bottom of our anchor we have at 117340, which is down here. So if I were to say, this is probably the most fresh and authentic level that I see right here is this wick overlap. And if my charts look unfamiliar to you, I'm using FXCM because it's always been my favorite platform since I wish FXCM could still do business in the United States, but they can't, but unfortunately. So I still use the platform. It's a demo account, a UK demo account, but I still chart on it and then I enter my orders on my phone in the OAND app. But this, I would expect some unfilled orders to be here too. Maybe too bad here. This, to me that's a clearing wick, but I think there still should be some unfilled orders there. I don't think price is getting this far down though, to be quite honest with you. I think it's going to catch something maybe in this area. There's a bunch of levels to choose from, so I would take a confirmation entry on this one. And there's this too. This is also fresh and authentic, but it's very close to where the current price is. So you really need number one, the stock market to be going up. You need equities to be going up so that money is coming out of the yen and not flowing into the yen. If the stock market's crashing and equities are crashing, then money's going to flow into the yen and this is going to come down. And it's probably going to blow this level and it might blow this level, depending on how far things go with the equities. So if equities are having a good day, which is a possibility because it's Friday, and as we all know, the market's supposed to go straight up on Friday to make people feel good about their 401ks and all the money that they have invested in the market. The plunge protection team is going to say, okay, we need the market to be up on a Friday. We need to end on a good note on a Friday. They always try to end in a good note on a Friday. So that's what I would say. Like I think that maybe it would catch this level or this level and then we should go up. They really want to take this up on a Friday. They don't want any money going into the yen on the Friday. So that means if the euro's strong, if the dollar's getting beat up a bit, and if the stock market, the equities are going up, this should go up also. That's my thesis, and I'm sticking to it. So let me put some lines on this. So when I have multiple levels to choose from in an anchor, I like to use a confirmation entry. I want to see price turning in the zone, perhaps on a smaller time frame. So, my level is being chosen on the 4-hour, but if I go down to a 30-minute, I want to see price like turning in the zone, perhaps with a reversal pattern or with a color change, something to that effect. Maybe like an engulfing bar or some other reversal pattern that you might be familiar with. Can I explain the money flow into and out of the yen, please? Oh yeah, absolutely. So when you have a risk on day, that means people are willing to put their money in equities. They're willing to put their money in the market in riskier assets. Typically, historically, riskier assets. So when it's a risk on day, the yen and the Swiss are considered safe haven currencies. They're considered safe haven assets. So are the bonds and gold. So, but if you're dealing with currencies, it's really the yen and the Swiss. Those are the two major safe haven currencies. So if the stock market's flying, and people, it's a risk on day, everything's going great, there's a lot of great economic news coming out, the president's happy, the Fed's happy, they're cutting interest rates, everything else. If the perception is and the sentiment is that we are doing well, let's put our money in riskier assets, it's a risk on day. And when it's a risk on day, money comes out of the yen and goes into some other currency. So you'll find that all your yen pairs will go up. If it's a risk off day, if things are not looking good, we're not getting good economic numbers, the president's pissed at the Fed or China or something else, the Fed's pissed off and they're doing all kinds of stuff, whatever. Or if they're tightening, sometimes, but if it's a risk off day because things are looking bleak, maybe Asia was down, their stock markets were down majorly overnight, and Europe's stock markets were down majorly overnight. The day starts with Asia. Every day begins with Asia. So Asian markets start, then Euro markets sometimes follow the Asian markets, and then sometimes we could follow their markets, or we could do an entirely different thing. So if it's that way, if the Asian markets are really spooked and they're crashing, and then Europe follows and they're crashing, and then our markets start crashing, a lot of money's going to flow into the yen. And if the yen's stronger, because it's a risk off day, people are not willing to risk their money in the market and they're putting it into safe haven assets like the yen or the Swiss, then yen pairs are typically going to go down. So if you find that the stock market is really making a big move down, you're going to find that these yen pairs are going down also, because people are putting their money in the yen and they're putting their money in the Swiss. The yen and the Swiss are two currencies where their governments have said, especially the Japanese government has said, that they will support their currency at all costs. Like, it doesn't matter. They will always support their currency. So people have trust in that, and they will put their money in the yen and the Swiss if, the market conditions are dangerous or there's a lot of uncertainty or a lot of fear in the market. If there's a lot of fear in the market, money's going into the Swiss and the yen, typically. More so the yen, I think, than the Swiss, but you'll also see it in the Swiss. Do I ever set and forget? Sometimes I do. I do sometimes set and forget. If it looks like a really sweet level and a really sweet setup, I will do set and forget. I used to more often than I do now, because I find that I'm up in the morning anyway, so why not do a confirmation entry if I'm up anyway? But when I was working full time and trading at the same time, I was doing a lot of set and forget. I had no idea how you guys trade that shit. I don't know. I don't know what you mean by that. So anyway, so either of these levels, this is kind of this. It's a great level, but it's so close to current price that I suspect it. So I would think these two would be better levels, I would think, or this level. But if we are like, yeah, things are awesome, we're going to the moon in equities, then maybe this will get hit and then it'll take off from there. But we'll see. You have to be careful though, because there is some daily supply above us. So if it does take off, your targets might be limited, because we have a Wicco level here. So we should mark that out, because this is definitely going to make price bounce around. So the upside is kind of limited on this. This is a pretty big level. It's going to be a hard level to break. But we could, if it's a really nice Friday and things are going up and the president's happy and everything, we could go deeper into this level and then maybe end up turning it like about here in this level. We'll see. We'll see what happens. There's also some supply up here. I would mark out. So those are some, these are definitely this is going to be some resistance for price going to the upside, but if we're like really cruising and this is like a really nice day in equities, it could chew through this, maybe turn in the higher part of this level. So we'll see. We'll see what happens. Yeah, true. A chart is a chart is a chart. Absolutely. Okay. So the dollar yen is also uptrend setup, so we know that because the current action candle is a single red candle body on the end. The anchor are these two blue candle bodies to the left of the current action. The anchor is not engulfed by the previous move, so we're not sideways. And since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the lows are in control and we have an uptrend. And because the current action candle is red, we have a setup. So we have uptrend setup, and we have permission to go look for a trade in the trading time frame. Now, I mean, unfortunately, the weekly is downtrend setup, but we're about to break this anchor. So if we break this anchor to the upside, then this thing's just going to go higher. And we don't really have any supply in front of us until this level right here. So we have a little bit of room to the upside. So that would be our supply. As far as demand, there's some unfilled orders here. There's also a wick over wick overlap here that you could choose from. Let's see. The bottom of our anchor is 107.080. That's going to be down here. Okay, so we have a lot to choose from here. This level is probably used up. There's going to be some here, like some unfilled orders here. This is so close to current price, though. Unless the stock market's screaming, I think it's going to probably chew that up and come down here. And then there's a little bit of a level here. But this seems like a clearing wick to me. This is a very big level. If you end up taking this lower level, you really want to see price turn and put your stop underneath the pivot that's formed when price is turning in this level. And you can go down to the 30-minute to watch price come in and make its turn out, and then put your stop underneath there. Otherwise, that's a lot of risk to be taking. But I think this is a better level. You know, it's pretty conceivable. Price could come down here, bounce up, and then come up to the supply. Well, yes, the video will be available for replay later. I think it's available on the YouTube channel. But ask Bryan, he knows. So either of these levels, but I think this is really the better level. But this would be pretty good too. You just want to, you know, in any of these levels, especially the larger levels, if you have to reduce your position size in order to avoid that risk, you should do so. And the beauty of the forex market is that you can reduce your risk. You know, you can manipulate your position size much better than you can in futures. So you can and you should reduce your risk in order to avoid that risk, and that, you know, reduce your position size in order to avoid that risk. That's something that you should do. You can do it in the forex market, and you should do it for good risk management if you're dealing with something like a very big level, or, you know, putting your stop below a pivot or something else. So those are the two levels I like there. And then my target would be somewhere up here in this area. But it seems pretty good. I mean, it is I think we're going to break this anchor. This thing's going up, to be honest with you. It just looks like a reversal pattern to me. I would expect it to, but we're probably going to go up to about 109, I think. Or almost 110. I think. This just looks like it wants to launch. So my bias is to the upside. so let's go to the next one. Okay, so we're looking at dollar yen, pound yen. Okay, so pound yen is downtrend, no setups. The current action candle is the single red candle body on the end. The anchor are these two blue candle bodies to the left of the current action. The anchor is not engulfed by the previous move, which is the single red candle body, so we're not sideways. And since the nearest high with respect to the top of the anchor is closer in time than the nearest low is with respect to the bottom of the anchor, the highs are in control and we have a downtrend. And because the current action candle is red, we don't have a setup. So it's just downtrend, no setup. And that is the corrective move on the weekly. So I expect that things will probably be turning somewhere in this area. But for now, it's downtrend, no setup, and we don't have a setup here. So we can skip this one. Can I explain my entry confirmation like on the middle zone? Okay, let's go back to that. Okay, so when I'm looking for entry and confirmation, let's go down to a 30-minute because I like to look in fractals of approximately 6. So I go down to a 30-minute really for my next time frame down. On the 30-minute, there's also this wick over wick overlap, so that's pretty decent. And on the 30-minute, it's interesting because that level that I thought was, might be some unfilled orders. It looks like this wick was taken out by this wick. There might be a little bit of unfilled orders right here. There's probably a little bit of unfilled orders here that could catch this and take it up. So we could mark that if we want to. But if price doesn't turn in that small little bit of a wick that's left, it's coming down here, essentially. So when I'm looking for price to turn in here, I want to see something like this. I want to see like a drop base rally, rally base rally, or something, or some other reversal pattern. Like if I see a red candle come into this, I want to see a blue candle, exceeding it coming out. Like an engulfing bar or something. You know what I'm saying? Like we have a drop base rally, and this blue candle closing above the red. I like to see, you with a Vollmering pattern, I call this a Vollmering pattern, but it's a drop base rally. When you have a blue candle, red candle, blue candle, and the blue candle's closing above the red and above the prior blue, that's a color change right there. And the color change is really powerful too, especially on a 30-minute. Can go against you, of course, but it's pretty nice when you have a drop base rally and then a rally base rally, and this blue candle is closing above the red, closing above the blue. When it's closing above this, that's even better. When it's closing above this anchor right here, then that's even better. But you have a blue, red, blue. The blue is closing above the red and closing above the blue. That's usually a good indication that you're going to the upside. So if I saw something like that in this level, that would give me good confirmation that we're going up. An engulfing bar will do it also. Like say I have a red candle here and I have this huge blue candle that's engulfing the red. That will do it for me also. I'm just looking for some sort of reversal pattern or color change inside this level in order to go long. And you could find that in the 30-minute. If you feel more comfortable looking at it on a 15-minute, you could do that. If price turns in this level and makes a pattern such as this, you can reduce your risk by putting your stop underneath the pivot that's formed in this level. So if price is coming down, red, 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 blue, red, blue, put your stop underneath of the turn in price that's formed in this level, and that's a way to reduce your risk a little bit more. Does that make sense? What do I mean by anchor? When I say anchor, anchors are kind of like the colors. So if you group the movement in colors, like all these blue candles would be one anchor, this red candle's another anchor, these two blue candles are another anchor, and I'm talking about the bodies essentially. The bodies, these three red bodies are an anchor, these two blue bodies are an anchor, this red body's an anchor, all these three blue bodies are an anchor. That's what I mean by the anchor. Hopefully that makes sense. And like I said with the analysis, when I'm analyzing trend, I'm looking in terms of those color groupings based on the bodies. So the action, this would be the anchor, and I'm just looking at the bodies. So I'm looking at the top of this blue candle body to the bottom of this blue candle body. That is a color grouping. So that to me is the anchor in this move. And that's what I mean by that. So hopefully that makes sense. Okay, so Aussie yen, I have a feeling all the yen pairs are like this. I have a feeling they're all uptrend setup because of what happened today. Okay, good. Okay, so Aussie yen is uptrend setup. So the current action candle is the single red candle body on the end. The anchor are these two blue candle bodies to the left of the current action. The anchor is not engulfed by the previous move, which is the single red candle body, so we're not sideways. And since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the lows are in control and we have an uptrend. And because the current action candle is red, we have a setup. So we have uptrend setup. We have permission to go to the lower time frame, the 4 hour, to look for a setup. So let's go back to the 4 hour. All right. So I have a nice level, wick overlap right here. And then, oh, this is a nice level on level situation right here. Because we have this big candle, smaller candle, doji's sort of like candle, and then this big candle. So this is like rally base rally. There's some unfilled orders here. There's going to be some unfilled orders here. The wick overlap is a rally base rally in a smaller time frame. So this whole area is pretty ripe with unfilled orders. It's stronger because it's a level on level situation, so it's a little bit stronger to me. So this is the area that I would be looking in. Now you can either put your stop somewhere below this. If you're going to put it below this entire level, I would suggest somewhere in this area, 72,341. Because if support and resistance traders are looking to trade here, you want to be a little bit below that. But this is a pretty good level. And if you want to do a confirmation entry, you can look on the 30-minute and wait for price to make its turn in here. Either with a color change, a blue, red, blue to the upside, or, an engulfing pattern or something like that. Put your stop right below it. It depends, again, because this is a yen pair. The Aussie could be weak, the yen could be strong, especially if the stock market is crashing tomorrow, the yen could be strong. But if the stock market is doing well tomorrow, the yen's probably going to be weak. So that would work into this going to the upside. And the Aussie's been beaten down quite a bit lately, so it probably could, it could use some retracement to the upside. So I would say that I'm always looking for the confirmation entry myself, and then putting my stop below some pivot that's formed in here. But if you need to set and forget, reduce your position size, and I would recommend putting your stop down here so that you avoid any kind of support and resistance traders that might be playing in this area right here. I try to avoid specific players in the market. So like if you pulled fibs on this last move, if you pull fibs on this move right here, oops, I did it the wrong way. It should be this way. Okay. So if you pulled fibs on that move, your 50% retracement is right here. And coincidentally, you have this pivot here, this pivot here, this pivot here. Support and resistance traders are going to like this entire zone. So if the fib traders and support and resistance traders are in control of the market more than the supply and demand traders, you could come down as low as here and price could turn in this area. I mean, they could come down to the 61.8, but the likelihood, because you got unfilled orders here, you've got support and resistance traders here, you got your 50% retracement, your fib traders could want to trade here. You want to put your stop below that, because you're dealing with all these different players in the market. I'm pulling a fib. I do that once in a while. I just want to know where everyone's playing. You know, I'm trading supply and demand, but I want to know what the fib traders are doing, and I want to know what the support and resistance traders are doing because they matter too. And, you know, I don't want to get in their way when they're trading and put my stop in a bad place. That's funny. So I'll leave that there. But so this whole area is great. It all depends on how much money is flowing in or out of the yen, to be quite honest with you. So, all right, let's go to the next one. Okay, so the dollar Swiss is downtrend, no setup. So we know that because the current action candle is a single red candle body on the end. The anchor are these two blue candle bodies to the left of the current action. The anchor is not engulfed by the previous move, which is the single red candle body. And since the nearest high with respect to the top of the anchor is closer in time than the nearest low is with respect to the bottom of the anchor, the highs are in control and we have a downtrend. And because the current action candle is red, it's just a downtrend, no setup. So we have nothing to do here. We have no setup here. Thanks. I'm glad you guys are enjoying this. This is good. This is what I do every night by myself in the dark. Okay, so pound Swiss is also downtrend, no setup. So the current action candle is a single red candle body in the end. The anchor are these two blue candle bodies to the left of the current action. The anchor is not engulfed by the previous move, which are these three red candle bodies, so we're not sideways. And since the nearest high with respect to the top of the anchor is closer in time than the nearest low is with respect to the bottom of the anchor, the highs are in control and we have a downtrend. And because the current action candle is red, it's just a downtrend, no setup. We don't have a setup here. So we have nothing to do on this one. And look, it's a good thing too because like there's no level here. It's just nothing but racetrack. So, you know, price could retrace this quite a bit, but we have no setup here, so we're not even going to worry about it. But if you're day trading, you know, be aware of that. A mason jar? What's a mason jar? I mean, I know what a mason jar is, but I don't know what it is with respect to Twitch. So, interesting. Okay. So, Aussie dollar is uptrend, sideways bias up confirmed. So, remember when I said that like the Aussie dollar's been beat down so much? Like this really has been beaten down so much. And it's down into these weekly levels, like 6,700 level. It keeps testing the 6,700 level, but it won't close below it. It just keeps bouncing off of it. But this has really come down. Like this is really, the Aussie's really been beaten down. And it looks like it's starting to make a reversal pattern, if you ask me. Like on the weekly, I really think we came down, we're kind of making a W pattern. You know, we had a lower low here, but we had another higher low. So to me, it looks to me like it's gonna start closing higher on the weekly. And this has really been beaten down hard. So it's about time for this thing to start reversing to the upside, which helps the Aussie yen also. Okay. So we're sideways bias up confirmed. We know that because these two blue candle bodies are action candles. These three red candle bodies to the left of the action are the anchor. And since the action is exceeding the top of the anchor, the nearest low with respect to the bottom of the anchor is here. And that's close. Actually, this is wrong. The indicator is wrong because we have a gap down. So because we have a gap down, it really should be downtrend setup anchor break, I think. Because, okay, so the anchor is engulfed by here. You know, it is kind of sideways bias up confirmed, actually. Yeah, that's kind of weird. Because this anchor, if you consider this a red candle right here, because of the gap down, if you filled in a red candle here, which is usually what you should be doing if you're considering gaps, then it is sideways bias up confirmed. I don't know. Okay, so either way, we're going up. Apple pie? I don't know. Anchor engulfed. Yeah, the anchor is engulfed by the action candle. So I mean, we're going up. That's just the bottom line. And we've made a higher low here, so that's also indicative of an uptrend right here. So sideways bias up confirmed. So if this pulls back, if this just keeps going up, you're not going to have a setup. It's not going to come back and get anything. And quite frankly, you know what? I wouldn't set up a trade here because the only level that I see in this entire thing is this wick overlap here. This is the level that I would have liked. And price already came into it and took off. So to me, it's already tested. There's not much left in here, and there's nothing below it to support it. If it was a level on level situation, I could set something up here, but all we have is just racetrack. So I would not set something up here. It's already been tested. Price already took off and came up to this high, then came down a little bit, and then is starting to take off again. So I would just skip this one altogether, because for me that level is a little bit used up. I would not take that again. Not unless I had some sort of compelling reason on a smaller time frame or, saw a reversal pattern. So I would skip this one. Okay, so let's see. So the next one is your Aussie. This is, so far, if this candle remains blue, it's uptrend, no setup. So if this remains blue, our current action is a single blue candle body on the end. I can expand this a little bit. The anchor would be the single red candle body, and the previous move is the single blue candle body. So since the nearest low with respect to the anchor is here, the nearest high with respect to the anchor is here, the lows would be control, and we'd have an uptrend. But it would be just an uptrend, no setup, if this remains blue. But if it remains red, then it's an uptrend setup anchor break, because we're breaking this anchor here. This would be our action candle, which is engulfing this anchor to the downside. So it would be uptrend setup anchor break. So either way, we don't really have a setup here. Either way, and we're actually trapped. If you consider it this way, we're kind of consolidating in a range right here. We have this big up move, then this down move, and then this price is just like chopping sideways. We're kind of in a box of doom here, so it's not really great to be setting up a trade anyway. We're just going sideways, really. We haven't really left this area. We just keep trading inside of it. So because we're making higher lows, I would assume we might go to the upside. This might end up being, a big rally-based rally to the upside, like it looks like on the weekly, rally-based rally. But we really don't know. We don't have an indication either way which way it's going. We're still trapped inside of this box. So I would just skip this one. I'd leave it alone, be honest with you. You've been stuck in the box of doom before. Yeah, I've been stuck in the box of doom too. I try to avoid boxes of doom because they're not fun to trade. They're really not that much fun to trade. So, okay. So EuroCAD is also sideways bias up confirmed. So the current action candle, I can expand this a little bit. The current action candle is a single blue candle body on the left. The anchor is a single red candle body to the left of the current action. The anchor is engulfed by the previous move, which is this single blue candle body. So the trend is sideways, and because the action candle is exceeding the anchor to the upside, it's sideways bias up confirmed. So we don't really, because this anchor is so small, we don't really have that much to choose from here as far as a level. If we follow the rules, we should find a level somewhere before 146,197. Yeah, I mean, price has already come here and consumed it. There is this level here that if this holds, this might go up to the upside, but it's going to be challenged here by the supply level. So while you have this demand level, it can't go very far because of these unfilled orders right here. So it's really a trap, to be honest with you. This looks like pretty good demand right down here. but it's not going to go very far because you're going to be trapped by the supply here. So I expect this to keep chopping sideways until it breaks one or the other. And since this is downtrend setup on the weekly, I mean, it could end up, just turning around and continuing that trend. We don't really know. We don't really know what it's going to do, but there really isn't any profit potential because you're trapped between this demand and this supply. So that doesn't make for a good trade. So I'm not going to set that up. You're getting sick of CAD pairs. Yeah, I know. The CAD pairs, can be kind of annoying sometimes. There's employment. Yeah, there is CAD news tomorrow for sure. That will do something, but it might end up with another wiki move like all these wiki moves have been. So it might wick somewhere, but it might just stay trapped in this whole box of doom right here. So we don't know. We don't know what's going to happen, but I don't want to set anything up on that. Okay. So the euro pound is uptrend, no setup. This was a huge move today. Look at this. Look at this. These 4-hour candles are insane. Like, that was just... I was not in this trade. I would have liked to have been in this trade, but I wasn't even looking at the euro pound today. But that was a really nice move. It's just, oof, came all the way down here, and we're sitting in daily demand. Right here. These unfilled orders. This is a reversal pattern right here. This is pretty good demand right down here. And it's weekly demand. So, and since we just came straight down and we didn't really form any supply, this is probably going to easily retrace up is my feeling. So if you're day trading this, and the euro seems stronger than the pound, if you lay out a screener of, euro pairs versus pound pairs, and the euro pairs seem stronger, the euro pound's going to go up. If the euro pairs seem stronger than the pound pairs, comparatively speaking, this should be going up. And there's really not much to stop it because it just came down with a straight move. So if you're looking for day trades, that could be a possibility for you since we're coming out of daily demand and weekly demand. So we'll see. We'll see what happens. But anyways, we're uptrend, no setup. So the current action candle is a single blue candle body on the end. The anchor is a single red candle body to left the current action. The anchor is not engulfed by the previous move, which are these blue candle bodies, so we're not sideways. And since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the lows are in control and we have an uptrend. And because the current action candle is blue, we have straight uptrend, no setup, so we have nothing to do here. So okay. So New Zealand dollar is sideways bias up confirmed. So the current action candles are these two blue candle bodies on the end. The anchor is a single red candle body to the left of the current action. The anchor is engulfed by the previous move, which is the single blue candle body, so the trend is sideways. And since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the bias is up. And since the action candles have exceeded the top of the anchor, it's confirmed, so it's sideways bias up confirmed. So we don't have a trade here. It is the corrective move of the weekly, which is downtrend setup. So I would expect this to hit some sort of daily demand and turn over. Right now it looks pretty bullish to the upside, but there's a level right here that's kind of been tested by this wick, but this has not been broken yet. So this daily level still has probably got quite a bit inside of it. It's just been tested by that one wick. So this is probably going to be holding down price, I would think, quite a bit. Or it still is. I mean, price still has to come up here and see what's going to happen. Is it going to turn over again? Is it going to break through? Is it going to go in deeper to this level and then turn over? We really don't know. But those are possibilities. And right here we see we're just trading in a box of doom, quite honestly. There's no level to take here because this would be the only level I would have relied on, this wick over wick overlap. But price already came down through that, took it, and then went up. and then came down again. So I don't see anything else to take in this whole candle except for this level down here. This level could be a possibility. Let's see. The bottom of our anchor is 62919. Yeah, it's below our anchor, so it's risky because price would have to break the bottom of this candle body in order to get to it. So that's a higher risk level. So I don't want to mark it out and set it up, but this is your next level down from here. But it's because it's outside the anchor, it is higher risk. Once price breaks the bottom of these candle bodies, it's very strong and may want to go down further. Maybe to this area right here, this wick overlap. So I won't set this up. I'm not going to set anything up on this. The New Zealand dollar, like the Australian dollar, has been beat down quite a bit, so it should be, it's trying to bounce up. How strong it is, who knows? It might just come down again. But it really has been beaten down quite a bit. Okay, so let's go to the next one. Dollar CAD. This is downtrend setup. And it's the corrective move of the weekly, which is uptrend setup. So presumably, price could come down, test something, and then continue upward. There isn't any great level here on the daily for it to test, but support and resistance traders have come down to this level and bounced out, so that might be it for it. It might be, the support and resistance traders may very well be in control of this move. And, that's why price bounced right off this level right here. So we'll see what happens, but it definitely looks like, a bullish pattern to me. But we'll see. We'll see what happens. Because look at this. I mean, there's if price falls, though, it has quite a bit to go. There's this level right down here that it could bounce out of, but quite frankly, this would be your target. If we're taking this down, I would say this is the target. Right here. And I'm going to, I was going to call it purple, name it purple for target. So this is the level right here that I would call a target. But so it is the corrective move of the weekly. If we do come down further, this is the place where I would expect for it to stop. So it's downtrend setup. The current action candle is the single blue candle body on the end. The anchor is this single red candle body to the left of the current action. The nearest high with respect to the top of the anchor is here. This is closer in time than the nearest low is with respect to the bottom of the anchor. So the highs are in control and we have a downtrend. And because the current action candle is blue, we have a setup. So we have downtrend setup. We have permission to look for a supply zone to take this down further. And in this area, really, you have some unfilled orders here in this wick. And then you have this level right here. So either one could turn price down. If the dollar is very weak tomorrow, if the CAD's very strong because of the CAD news, it could conceivably come down to this level. So this is a possible supply zone. But then there's these unfilled orders right here that are also a possibility. Okay, so these are two levels that I would be looking at for price to turn in. If price doesn't turn in this, I don't like this level because it's so close to current price, but if price turns in this level, if the dollar is extremely weak and the CAD is very strong, then it will turn in this level and come down. Um, Otherwise, it may just bounce around. Even if it comes down briefly, it may just bounce around and then come up to this stronger level up here. To me, this level is seems stronger than this wick. So I would expect the price to turn here, though it may turn here. And again, if you're waiting for a confirmation entry, you want to see price turn in this level on a smaller time frame, and then put your, to minimize your risk, put your stop above the turn in price. Or if price ends up just bouncing around and then coming up here and then turning over, you want to just put your stop above there. Your stop is best protected above the pivot, but that's a lot of risk. And if you do that, you have to reduce your position size in order to avoid that risk. But a way to minimize your position, minimize your risk rather, is to wait for price to turn in the zone and then put your stop above there. That's really the best way to be safe in taking these trades, but we'll see what happens tomorrow. Will natural gas go up? I don't know. I don't know. I don't have that chart in front of me right now, so I have no idea. And I haven't been following natural gas so much. I look at CL and I look at ES, but I don't really look at natural gas too much. So I don't know. Okay, so let's look at the CAD yen is the next one. Okay, so CAD yen is sideways bias up confirmed. So the current action candles are these three candle bodies on the end. The anchor is this single red candle body to the left of the current action. The anchor is engulfed by the previous move, which is a single blue candle body, so the trend is sideways. And since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the bias is up. And since the current action candle exceeded the top of the anchor in the same direction, it's sideways bias up confirmed. So, and that's consistent with a weekly, so that's the impulse move. So if price comes down, we expect it to grab a level and then hopefully continue higher, but we just hit this supply level in the daily, which is a concern. So price is probably going to come down quite a bit. You don't want to go long into daily supply because you'll get your face ripped off, really. So you might want to skip this one, but if price is going to come down, I expect it to come down to this area, this 80.50. Let's see. This seems like pretty good demand. If this holds, I mean, you want to take this on confirmation because if you're coming, your daily supply is going to be stronger than your 4-hour demand. So since it's hitting this very strong daily supply level, this could come quite, really far down. This could blow this level and come down to here. So I would be very cautious with this. This is a level. This is a decent level. If we were uptrend setup, and we are uptrend setup, but if we weren't in daily supply, this would be a wonderful level that I would rely on and, more or less bank on. But because we're coming out of daily supply, that's very powerful and very strong. So I don't know that this level is going to hold, and that's why you really should take a confirmation entry here, just because we're coming out of daily supply, which is stronger than this level right here. So it really depends on what's going to happen with the CAD and with the yen. So like I said, if the stock market's like flying high and the CAD's okay, then this is going to go up. So maybe it will come down to this level and then bounce out and then go up. That's a possibility, and they'll chew into this daily supply. It probably won't go like really strong or really far because it's going to be held down by the supply quite a bit. But you might get a bounce off of this. If the stock market's flying and doing wonderful and everybody's happy, then money's going to come out of the yen and go elsewhere. So that would make the CAD stronger. So if that happens, then this level could work. If not, if the CAD's weak, then we could go further down into this area here. That's what I'm thinking. Nat gas might not be as quick as you want, but yeah, that's true. Cool. Alright, so let's go to the next one. So the pound Aussie, this is downtrend setup anchor break. So basically, because these action candles have exceeded the top of the anchor to the upside, we have a trend change. We have a trend violation. And we have nothing to do here, really. Because we still have this higher high to deal with here, so we have no setup on this pair. And that's a pretty big racetrack. Into daily supply, I'm guessing this is probably going to come down a little bit and retrace this. The pounds all made a huge move today. Would not be surprised if it came down and retraced this. Maybe to about here. Or if you pull fibs. You know. Actually, I did the wrong way again. Here. Which is about the same area. I mean, the 38.2 is about the same area as here. I would have thought the support and resistance traders would be playing around this area. Or the 50%. So, I mean, it could come down here and bounce back, or the 50%. We'll see. Either one of these. I think. It's definitely got to come down. It's got to retrace. And it's sitting in daily supply. So, there's that. Gonna mark this right here. So it's probably bound to come down further, I'm guessing. Okay, let's go to the next one. Pound CAD. That pound had a Red Bull this morning. Yeah, it did. It really did have a Red Bull this morning. Ascending Wicks, Bryan's ice cream. Yeah, I know. We like Ascending Wicks. Yeah, the 38.2 on a racetrack like that is very good. Very good level. For sure. Alright, cool. Okay, so the pound CAD is uptrend setup. So the current action candle is a single red candle body on the end. The anchor is a single blue candle body to the left of the current action candle. It's not engulfed by the previous move. So we're not sideways, and since the nearest low with respect to the bottom of the anchor is closer in time than the nearest high is with respect to the top of the anchor, the trend is up. And if this remains red, we have uptrend setup. If not, it's just sideways bias up confirmed, because this is sideways, it's engulfed by the previous move, and then this action candle would exceed the top of the anchor to the upside. Either way, it's basically we're going up with respect to this, and that's consistent with the weekly. So, but there is nothing to grab onto here. I mean, if price comes down here, there's no demand in this 4-hour candle to lean on. And like I said with the other pair, the only thing you have working that could possibly work with you are the support and resistance traders who might grab this level or this level, or the fib traders, who might grab the 38.2 or the 50%. So I don't see anything to play here unless you're looking for that. If you watch those levels, like from here to here, oops, that was the wrong one. Cancel. So again, your 50% retracement and even just slightly above the 50% retracement is lining up with these levels. This is probably, if the pound is really still super strong and the CAD is weak, it might only come down to 38.2 and keep going. If not, it may retrace to here. So just keep an eye on that. I mean, it's tough because there's no demand level in here that we can grab onto. All you can do is see what the support and resistance traders might be doing, what the fib traders might be doing. And then, be cautious, be careful. But, if they're in control, they're going to let you know. They're going to bounce right off the 50 or right off the 32. They'll make it clear that they're in control. Okay, so let's go to the next one. Okay, so pound New Zealand is downtrend, no setup. So the current action candle is a single red candle body on the end. The anchor is a single blue candle body to left the current action. The anchor is not engulfed by the previous move, which are these two red candle bodies, so we're not sideways. And since the nearest high with respect to the top of the anchor is closer in time than the nearest low is with respect to the bottom of the anchor, the highs are in control and we have a downtrend. And because the current action candle is red, it's just a downtrend, no setup. So we have nothing to do here. We don't have a setup here. So skip this one. Okay, so Euro New Zealand is sideways bias down. And if you take a look at this daily, this is seriously a box of doom. It's just sideways, 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 sideways. Like, it's not going anywhere. It's trapped here. It's going to break out one way or another, but right now it's just trapped. It's really trapped in this weekly wick if you think about it. And this weekly wick is what's trapping this. So we have nothing to do here. It's just sideways bias down. It's trapped in this box of doom. It's trapped in this weekly wick. We need to see price make a move one way or another and set up to either continue to the upside or break down to the downside. But right now, nothing to do here. So that's it for all the pairs. And thanks guys for joining me tonight. Do you guys have any questions? Box of Doom does not sound like a good trade to be in. No, it's not. It's usually not, unless you're one of those really good like range traders and you're good at like just trading the range. But still, with a pair like this that can be very wicky, you know, that could definitely stop you out. So it's the Box of Doom is, to me, it's not very fun. I'd rather trade with a trend. I don't want to be, you know, trapped in this consolidation area. But the more it coils like this, the stronger the breakout would be or the breakdown would be. So, you know, you can look forward to that. I don't trade the racetracks. I don't trade the racetracks if they're not with a trend. So I will not trade a racetrack if it's counter trend. I like to stay with the trend. I feel like if it's counter trend, it's got very limited, you know, duration. It's not gonna finish a racetrack most likely. There's racetrack ruiners who ruin it for me, like fib traders and support and resistance traders. So I don't necessarily trade a racetrack just for the sake of being a racetrack. I look for it as profit potential if I'm trading with the trend. I would like, you know, obviously if I'm trading with a trend, I'm grabbing a demand level. I want to see racetrack above me, so that's just further profit potential. But otherwise, I'm not trading them per se, like just by themselves. Do you use any chart overlay studies? You could put a 2% envelope. No, not really. No, I just mark out my supply and demand. That's pretty much it. Sometimes I use moving averages, or pull fibs, but it's mostly just supply and demand. And just when I'm doing these overnights, it's just basic charts. When I'm trading in the morning, I do have some moving averages on there just for context to see where we're overextended from the moving average traders. But when I'm just doing these overnight setups like this, it's just really just very plain charts. And others like RSI, ATR. No. I mean, I like to know ATR to know maybe how far a move will be on average, but no, I don't really use it for entry. Okay, thanks. Yeah, I'm glad you enjoyed my explanations. I hope they were clear. Hope I made some sense tonight. And yeah, I'd like to come back again. And I know you guys are punching in the exclamation ticket. I'm not yet familiar with that giveaway. But Bryan is. So if you contact Bryan in the Discord, he can talk to you about that. Okay. So thanks, guys. Thanks for joining me. And I'll see you guys later. And feel free to ask me any questions in Discord. I'm happy to answer them. And have a good night. Oh, what is the average time I'm in a trade? Primary. Yeah, I mean, I do these swing trades. I do day trades in the morning. But these overnight setups really kind of guide my day trading also. So if I'm in these trades, um, it depends. Like I like to. I'm not in trades forever, to be honest with you. I probably should stay in trades longer than I do, but I might be in a trade like 2 or 3 days, or just a day, depending on what's in the way. So, what was the trade that we had a setup on? I have to go back and find them. Okay, so say the Aussie yen. I don't expect this to go very far because we have. I mean, this supply could be chewed up, but there could be some unfilled orders at the top of here. So maybe this would last a day. Like maybe price comes down here, bounces out. Maybe it's a day or two. Like I don't expect this to go very far. I mean, there's still some unfilled orders here. The next level's up here. If price seems super strong, I might hold out till it comes out up to here. And that would be a few days. But for me, I like to get my achievable pips. That's a thing with me is I want achievable pips. So I go to the next opposing zone. I'll get in demand, go to the next opposing supply zone. I'm always looking for achievable pips. I get in and out, get out with my money. I'm not one of these people to hold these things forever. Maybe I should. There's times when I probably should hold them forever, like that pound move today. That went 161 pips, but that was really out of the ordinary. Like I did not expect it to go that far. I was getting out, I think somewhere around here, because I was looking at in the 2 hour. I did not expect it. That's really that's a crazy move, to be honest. Look at the size of that candle with respect to all the other candles. That's an absolutely crazy move. I never expected that today. So I'll tell you, I probably got out. I'm pretty sure I got out around here. So I got in down here, and I got out up here. Because to me, that was the next fresh opposing supply. I don't think I held out. Maybe I got out here. I can't remember. I got to look at my trading results again. But this was only one of the many trades I took today. And I got out here, which I thought was pretty good. And this thing just went way farther than I expected it to go. I never thought it was going up there. That's crazy. Like I got in, 333 is where I got in. So I got I got about 60 pips out of it. It went 236 pips it did today? That's crazy. Last time I looked at it, it was down here. It was and it even went even higher. So this was a crazy move. Like that's just crazy. This is a 2 hour chart for crying out loud. And it went that was just insane. I got 60 pips and I was happy. And then it just went much higher. But whatever, if you guys hold on to these things, you could get moves like this. Or things might just reverse on you. So for me, I like to get achievable pips wherever I think it's going to next. And just boom, boom, put my target there, get in my next trade. That's typically the way I handle things especially even on these swing moves, unless it's, the next target is very far away. Then I will set my sights higher. But this was fresh and authentic supply. This was pretty good supply. And it that just blew through all that and just went even higher. Like, I did not expect that move. So things like that will happen. I'm not going to get every pip. And I don't expect to. It's not a big thing for me. I get what I get, and then I go to the next trade. Oh, wow. Your fib draw was a hit of, 2465. Yeah, there you go. I do scale out sometimes. So sometimes I'll take a first target, and then I'll leave something on for a runner. I did not in this situation, but I do that sometimes. I look for 2 or 3 to... You look for 2 or 3 to 1. I look for... I'm not a slave to the, 3 to 1 or the 2 to 1, that type of thing. I try to get what I can get. Generally, the way I set up my trades, if you are looking, like, say, the Aussie yen or something, we're uptrend setup. Now, this is a corrective move, so it's not quite a great example, but especially if you are in the impulse move. If this was an uptrend of some sort and you have an uptrend here, the trend should carry the day. Unless you're in opposing higher time frame supply or demand that's going to push price in another direction, the trend should carry the day. So that's the way I think of it. So I go to the opposing zone. It's usually, sometimes it's a 2 to 1, sometimes it's 3 to 1, but I'm not that arbitrary with it. To me, the structure of the chart dictates where my targets should be and where my stops should be. So, and if I'm with the trend should carry the day. Unless I screw it up and I'm trading into higher time frame zone that I didn't realize I was trading into. But I generally try to stay out of higher time frame opposing zones. So that's the way I trade. Hopefully that makes sense. So do you guys have any other questions? Okay, if not, have a great night, and I'll hopefully talk to you guys soon. Feel free to ask me any questions in Discord, and I'm happy to answer them. Thanks. Thank you. I'm glad you enjoyed the session. Have a good night, guys. Talk to you soon. Bye.